Hello everyone and welcome back to another video. In this video, we're going to take a look at one of the more influential groups in the stock trading realm. This is none other than the r/WallStreetBets. But how did this group form and how are they able to influence the market so easily? Make sure to stay until the end of the video to get the answers to these questions. Make sure to like, subscribe, and hit the bell for more crazy amazing stock videos. Now let's get into it. As per the Wall Street Journal, the WallStreetBets subreddit was founded in 2012 by Jamie Rogozinski while serving as an information technology specialist for the Inter-American Development Bank in Washington, D.C. The 39-year-old who stays in Mexico City learned from fellow stakeholders that told him that his akin-to-gambling investment style was not going to work out after attending internet forums in the early 2010s. When I established the sub, I was searching for a group, a location for people to talk about high-risk exchanges in an unrepentant way for people to make some short-term money with disposable income. The development of WallStreetBets throughout the years has been nothing short of astounding. This is what the creator of the subreddit had to say. r/WallStreetBets remained relatively small and niche for the next few years. The sub didn't crack 100,000 subscribers until 2017, according to subreddit figures. The sub was still struggling to discover its mark during these early years, but it still had noteworthy activities. A common face on the sub is moderator Martin Shkreli, the pharma bro who is serving a 7-year prison term for stock fraud. In June of 2016, he introduced a ban on the word YOLO because the term undermines the central point of investing, and this mentality of roll the dice is amateurish. By 2020, the sub had swelled to over 1 million subscribers and was full of profits, losses, and memes posted by amateur traders. In January, Rogozinski wrote a book about his experience and revealed the WallStreetBet Championship in March. This trading tournament was to be held at Arlington Esports Stadium and involved 12 players who will each collect $50,000. The True Trading Group hosted the case, with moderators. On the sub, with users seeking similarities between the admins and the real trading party, this would create quite a bit of drama. Moderator Ari Gold 212855 claimed to confess in a leaked private message, according to Daily Dot, that TTG gave WSB 6 figures to back them, and that they are a part owner of TTG. In April 2020, the sub-moderator unexpectedly went private, only to briefly unprivate himself to post a message from the moderators. WallStreetBets has been liberated. WSB has been freed. The OG mods are working to get the band back together with those that were run off. Investments made that don't make sense by standard criteria but simply catch on online by mid-2020. Endless posts on money made from Tesla trades and meme stocks created a new gold rush where consumers decided to hop to financial security on that bandwagon. User Bagholder argued that by taking investing advice from the sub, they converted $3,000 into $102,000. Another consumer, Hospital, stated that by investing in Tesla, he had translated $5,000 into over $300,000. Deep Effing Value has become a bit of a folk hero, sharing on his YOLO Stocks Daily reports that he claims he spent almost $1 million in. Since users successfully burst the value of several stocks like GameStop, lots of new users flocked to the sub. GameStop stock was worth $40 at one time, but it rocketed to a peak of $492 thanks to the purchase efforts of the members of r/WallStreetBets. The purchasing power traditionally reserved for hedge funds is now in the hands of the public. With even their idol Elon Musk tweeting about WallStreetBets, the sub has now gone popular. Robinhood and other trading apps have stopped trading on GameStop stocks, and with this ragtag community of consumers reforming the type of modern finance, the conventional world of capital must come to grips. So now that the group has the owner of Tesla promoting them, they have been pumping stocks everywhere. GME is just one example. It's safe to say that many buyers of GME are only trying to make a quick buck. In this scenario, however, what's striking is how all of them are trying to convey a message. The ability to prosper at the detriment of the guy openly motivates a variety of WallStreetBet traders. The wealthy hedge funds and other institutional investors on the other side of the exchange. It is a reported aim to differentiate hedge funds from their assets, 99% versus 1%, by sticking to short stocks such as GameStop. Here's how the mechanics work. A short seller collects a broker's shares. After that, the short seller sells those shares. Then they wait until the stock's price declines. They buy the stock back, preferably at a cheaper price than they sold, and sell to the seller. On the other hand, short selling is incompatible with long-term investment standards, which should not, by definition, change positions easily and take on undue risk. Make no mistake, danger is loaded when short selling. It exposes a dealer to unlimited losses in principal. The worst you can lose if you're long on a portfolio is 100% of your investment. A stock's price can't sink below zero regardless of whether you paid for it, but there's no limit on how far it will go as you shorten a stock and it increases. Their brokers claim a margin payout as traders make short transactions, which is deducted from their accounts to cover future losses. If the price of the stock increases, the losses of the short seller increase, and ever further margin payments are demanded by the broker. Short sellers are forced to panic buy a stock in the event of a short squeeze so that they can return it to their shareholders before margin calls make them go bankrupt. The purchasing momentum pushes the stock price even more up, resulting in even more panic buying from short sellers seeking to protect their trade. WallStreetBets discovered that if they acquired en masse, the smart money shorting GameStop stock might be dealt a blow. At least one pelt so far has been claimed by the subreddit's short squeeze solution. One of GME's most famous short sellers, Melvin Capital, was required to take a $2.75 billion loan from a few other hedge funds. Well-known short seller Andrew Left said January 27th that the bulk of his short position at 100% loss has been compensated by his Citron analysis, but it still holds a limited position. However, though both money and victories have been claimed by WallStreetBets, very little of this has so far contributed to substantial support for the real underlying firm, GameStop. AMC Dakota Square 9 in Minot, North Dakota seems to have little to do with Silver Lake Partners. The theater is, after all, located in a metro area so isolated that it's 5 hours away from Winnipeg, its nearest major city. Among the town's crowning achievements is the Great Tomato Festival. Meanwhile, Silver Lake is one of the world's top tech owners, controlling $75 billion in funds from its offices in Menlo Park, California. But last week, the stock market surge fueled by the subreddit group WallStreetBets improbably pulled them together and supported them. The desire of Silver Lake to exchange an AMC $600 million loan note into equity was also triggered by the bubble that drove AMC Entertainment's share price to new heights. This eliminates the principal and all possible interest payments from AMC to Silver Lake, and helps to preserve the pandemic-battered movie theater chain, the biggest in the world, in Dakota Square and many of its 595 other locations nationally. The output is part of an investor's story that converges with Wall Street and the internet pathways in unparalleled ways, and may even redeem movies going in the process. Last week, in connection with Silver Lake turnaround, the spike also enabled AMC to issue $304 million in new stock, as its share price became more enticing to investors. If the coronavirus made AMC an accidental victim of forces beyond its grasp, then WallStreetBets is kind of a karmic payback, an excuse for fresh financial life for reasons that had nothing to do with it. AMC was really in danger, unlike GameStop, said Michael Pachter, an analyst at Wedbush Securities, a financial services firm that closely watches the movie theater industry. He said of the WallStreetBets party, they didn't intend to, but 100% of them threw a lifeline at AMC. AMC was a struggling business long before the pandemic. In recent years, AMC has gradually expanded in the United States and around the world as opposed to more deliberate rivals Regal and Cinemark, moving from 5,400 screens globally in 2015 to 11,000 in 2020. It has renovated many of its theaters in the United States. It began with a deficit of about $5 billion last year on $1.5 billion in revenue. The pandemic, which sharply reduced ticket and concession revenue, tightened the scope. Studios continued to delay their launches or move them to streaming services. Policymakers limited or banning participation, and consumers remained overwhelmingly at home. Then, WallStreetBets happened. In an attempt to place the squeeze on hedge fund short sellers, members of the popular stock trading group on the Reddit website started talking up and purchasing AMC stock. AMC's share price almost quadrupled to $20. It then went on a roller coaster ride when some creditors decided to cash out, and customers were barred for a while from investing on the Robinhood trading site. But on Monday, it still closed trading at $13.37, up 162% from its price of $5.09 a week ago, before crashing again on Tuesday. These higher prices helped both the transfer to the Silver Lake company to transform the move into a profit of 19% and permitted AMC to raise $304 million by selling new stock. Wedbush's Pachter suggests that the potential to work consistently further into 2021 will allow AMC to hit a point in the calendar where coronavirus vaccines will be frequently available and consumers will finally be able to return to theaters. Well, that wraps up today's video. GME and AMC may have been on the brink of bankruptcy or out of fame, but Thanks to these crazy investors, they have a brand new life again. Thousands of people made money off these spikes, not only the investors, but the companies themselves. Make sure to like, subscribe, and hit the bell for more crazy stock news. Until next time.